All right. So good evening. This is CryptoJex. Welcome to this session. This session is titled Sports slash Futures Trading Technique. This is a trading technique that some of us who have been in the space for some time already know, but for some of us, it's new to us. And if we go straight to just talking about the trading itself, like the futures and the spot trading technique itself, it wouldn't be nice for some of us who don't really understand how we got here, especially some of us who have not been used to trading before or who have not been used to the crypto market space. Okay. So like I always do to help beginners, we're gonna do a brief review of how we got here in just some few minutes, and then we go straight into the business of the day. The main essence of today is to show us how we can take advantage of what is going on, in the world. So when we talk about trading, okay, trading simply means exchange of goods for goods. All right, exchange of you're exchanging something with someone. Okay, so whenever there is a transaction involves an exchange of one thing for another. All right, you bring some money, or maybe you give me money and I give you something in return. All right, so that's trading, buying and selling. But it actually started from somewhere. Okay, without wasting much of our time, I would like to show us how we got into trading. Okay, like I said, for those who are new, if you just go into the trading, they get confused. All right. So this class is not meant to show you're not going to learn everything in one day, but with the tips that we're going to give you, you can do your homework. You can actually build from here. All right. So the first thing we're going to talk about is two major events that changed, the history of finance in our world. No matter how you try to, you know, hide from it, it is what it is. There are two major events that changed the course of the financial system in our world. Some of us here today, maybe we weren't born at that time. Some of us were born, but we actually didn't know what was going on. But the first event I'm going to talk about is the Bretton Woods Accord. Okay, I'm not going to go into all the old stories of, you know, hyperinflation that occurred in many centuries ago, and but in our own time, okay, that is like in the last 100 years, which you can say our own time. So whatever we're going through today, actually, it's actually happened, or it's actually possible because of some events that took place, about 100 years ago or thereabout. Okay, I didn't really check it, but 1946 up to now should be, I mean, that should be almost a century or thereabout. You have to check that out yourself. So, but this event was made possible after the World War II. Okay, leaders from across the world assembled themselves at Bretton Woods. We call it the Bretton Woods Accord. You can see the picture clearly. This was where leaders of major countries across the world assembled. I doubt if African countries were here, but if they were, definitely you won't even notice them. But leaders came here and decided on how to to secure the world's financial system, so to speak. So they agreed on something here, that everybody will have to back their own paper currency with gold. All right, because before the World War II, the paper currency was overprinted by many countries because they needed money to fund the war. Some countries needed money to buy weapons, so they actually printed excess paper notes, which crashed a lot of economy. So after the World War II, they came back to this event and agreed that henceforth, if you must print any paper note, okay, what we call the fiat currency today is actually fiat. Fiat is a Latin word, which means let it be so. Okay. So I don't want to go into all those history of how we got into the fiat and all that, but this is a very important history. You must understand if you must be a good trader. So they agreed here that henceforth from 1946, if you must print any paper, which is your money, if you must print any paper notes, you must back it up with gold. So the gold standard system was introduced at the Bretton Woods Accord. All right. So why this gold standard system was introduced, it kind of limited the amount of papers that were printed by countries, because you need to have enough gold to back it up. So that is why some of our paper currencies at that time had some atom of value. Okay. So like if you ask people in the 30s and in the 40s, they will tell you, oh, the money had value then, but now it has dropped more than 1,000 times, right? And I'll tell you why. So this was the first event. Now the world agreed and things kind of got to normal. Currencies began to have value. The exchange rates, that is the difference between the price of one currency of a country to the other, was not so much. They also agreed on a minimum of less than 1% difference in exchange rates. So at this point in time, there was really no need for speculation. So what we actually do today, that we are trading, like you see here, if I should open any of those charts here, what we actually do here is speculation. All right, you speculate, you use your skills, and you'll be able to predict if the market is going to drop, if it's going to go up by 10% or 20%. That is very huge. So in those times, there was really no need for trading like this, because the difference between these currencies was not even up to 1%, because it was backed with gold. So that was how it started in our own time, even though there were some other rough history that led to this meeting. So something happened in 1971. This guy came on board as the 37th president of the United States, Richard Nixon. He came on board and, he discovered that the gold standard system was not going to favor the American economy, because America actually, after World War II, they were the strongest nation in the world, if I should put it that way, because they built most of the machineries that was used to fight Hitler by France and Britain. So America's manufacturing was really booming. So that was one of the reasons why every other part of the world had to adopt the US dollar as their reserve currency. Okay. So America was able to convince the world that the dollar was equivalent to gold. All right. So every currency, every country's currency was pegged, apart from being pegged to gold, the most reserved currencies, was reserved in dollars. All right. So now Richard Nixon came, and because of the urge to print more US dollar notes, he had to cancel the gold standard system, because America didn't have enough gold to back up the papers that they were printing. And a whole lot of incidents happened while America began to print more dollar than they had gold to back up. Countries like France and Britain at that time started requesting back their gold, because America had what we call the gold window. The gold window would make it possible for you to, bring your gold, take the dollar notes, and then bring back your dollar notes and get back your gold. All right. So when America began to print, when countries sensed that America is now printing more dollar than they had gold to back up, they started requesting for their gold back. So as countries were taking their gold out of America, these guys sensed that if we continue to give these guys this gold, America would run out of gold. And we all know the truth is that gold is God's money. All right. Gold is God's money. And that is why gold has every quality of what it takes to be money. So gold is God's money. The paper notes is what we created, and we're coming there. So that's why this guy canceled the gold standard system. And when he canceled the gold standard system, what it means is that henceforth, from 1971, no paper will be backed with gold. So countries went on a printing spree. America has been printing. Now they're printing trillions. So many countries also have been printing. And that is why the fiat currencies of the world are diminishing every day. What you buy, if you buy something with $1,000 this year, if you buy something in this June, this is May, right? May 22nd. If you buy a pair of shoes for $1,000 now, this time next year, you're gonna need something like maybe $1,100 or $1,200, or if not more, to buy the same shoe, right? The value of the dollar is depreciating, as well as every other currency across the world, and that's the truth. So because of that excess printing, it led to the global financial crisis in 2008. Okay, in 2008, a whole lot of things happened, but What happened was that the banks were giving loans to people who were not ready to pay back because there's a whole lot of cash flying around, paper currency floating around with nothing backing it up. So these monies were in the hands of people who weren't paying it back. Before you know it, the bank themselves ran broke. There was no more money for the bank. So that created panic when Lehman Brothers happened to be, the oldest surviving banks in the world. They are the only banks that survived the Great Depression. You can read more about what the Great Depression is. So read more about it. So Lehman Brothers, announced that they were going to file for bankruptcy in the next 24 hours if they don't receive a bailout fund. So because of that announcement alone, it created a lot of panic that most banks, most stocks and various digital assets dropped by more than 50% within a twinkle of an eye, because the whole thing is a Ponzi scheme, right from the Federal Reserve to the Treasury to the major banks in America and other parts of the world and the commercial banks. Is all a Ponzi scheme. So the chief Ponzi creator, says, okay, there is a problem. I'll go bankrupt if you don't bail me out. Automatically, it creates the impression that the whole system is empty. And when that happens, people stop putting their money in the bank because they are scared of, they may not be able to get their money out. So just like a regular Ponzi scheme, when there's a bad news on every Ponzi scheme, what happens is that, the monies that are stuck in there cannot come out, and people also get scared of putting their money in. So that is what happened. And everything that has happened based on what I've just showed you from 1946, the Bretton Woods Accord, the Richard Nixon canceling the gold standard system, introducing the petrodollar system. It's quite another topic entirely. I'm not going to talk about all that because there's a whole lot of story. So, but that's how we got here. So in 2018, all the Ponzi scheme was exposed, all right? And that is when, many people lost a lot because of this financial crisis. People lost so much. So because of that, many people lost interest in government-controlled financial system because it is controlled by a set of people who manipulate the system as they so wish. They can sit down on their round table and decide what happens to the financial future of billions of people across the world. So because of that, this guy called Satoshi Nakamoto, nobody know who he is. This guy, people are just saying is this man, but they've had a couple of interviews with this guy, and he said, no, I'm not Satoshi. He's not. All right. So this guy called Satoshi Nakamoto in 2008, released an article that he was going to create, an electronic payment system that doesn't require any third party, which the banks will not be able to control. Okay. And it's going to be a peer-to-peer electronic cash system. Peer-to-peer in the sense that if you connect on the same network like me, we can share something together. All right. So with the introduction, this also brought about the introduction of cryptography. How you can combine cryptography with a whole lot of stuff to actually create a network where you can carry out this peer-to-peer system. Okay, this is what brought us into digital currency. All right. So before 2008, before the economic crisis, there was nothing like digital currency. There's been some previous proposals, but it was never a reality until 2008. Okay, so that's how we came into this era. And before then, there was even nothing like trading. All right. So Bitcoin came as a way to create, Satoshi came as a way to create a payment system, which Bitcoin was the first blockchain project, a payment system that will not be controlled by anybody. Okay, so because of the situation of that time, many people bought into this idea, and that was how the idea of Bitcoin started. Okay, I'm not going to go deep into blockchain right now because we're not talking about blockchain today. Okay, next time we're going to look into the in-depth, of blockchain, cryptographic hash functions. We'll talk about mining. We'll talk about the various proof of work, or the various consensus algorithms, proof of work, proof of stake, and all those proofs. So, but today I'm just trying to, take us from here, how we started, okay, for beginners especially, okay. So that's how we got into Bitcoin. Now, when Bitcoin came in 2010, Satoshi, let me show you the first transactions that Satoshi carried out in 2010. Remember, I'm not talking about blockchain, but I just want to just keep this in so that you can just understand how somebody's trying to come in. Okay, so here, if you come to blockchain.com, just type 0 because every blockchain transactions begins from 0. Okay, the first transaction you carry out, if you're a blockchain developer, for instance, when you try your first real-time transaction, okay, I'm not talking about your test transaction. Even your test transaction, every transaction begins from 0. The first transaction that generates an hash function for you is your block 0. Okay, so once you type 0 on the search box, you can see the transaction that happened. You can see it happened on the 3rd of January 2009 at about 10:15 a.m. This was the first blockchain transaction, the first Bitcoin transaction that took place. So this wallet address you see here is the wallet address of Satoshi Nakamoto, whoever this guy is. Okay, and at that time you can see it transferred 50 Bitcoin. All right, every first blockchain transaction is called a Coinbase transaction. Coinbase transaction is the first transaction that takes place on every blockchain network you build. So you can see it's even indicated the newly generated coins. This was the first coins that was created in 2009. All right, the fee was about the fee was 50 Bitcoin at that time because of the way it was designed. So Satoshi sent the first transaction at 50 Bitcoin my block reward. Sorry, the fee was actually 0. Remember when Bitcoin started, the fee was 0. Okay, and that was why it was able to sell. Bitcoin was able to sell. Many people was able to buy into the idea of Bitcoin because the transaction fee was 0. You can actually do any amount of transaction, at no cost. That was why people actually listened to Satoshi, and that was why the cryptocurrency space became this big. All right, but now, unfortunately, there's a whole lot of fees attached to blockchain transactions, and that's because of so many factors, the mining factor, and the rest. I'm not going to talk about that today. Okay, but this also happened, the first transaction that took place. All right, so we'll talk about this more when we're going into in-depth into blockchain and behind the scenes. So that's how we got here. Now in 2009, at this time when Bitcoin was created, there was no need for exchange because at that time most people were trading forex. Yes, most people were trading the forex market. Nobody knew that there was going to be a time when we can trade in the crypto space the same way we trade in the forex market. All right, so after some time, another coin was created, which is Ethereum came. From there, we had Ripple, and some other coins began to be introduced. Now, because of the creation of different coins, because if you check here today, as at now, you would see that if you come to CoinMarketCap, you will see that currently we have about 10,005 coins currently being traded on various exchanges. So when Bitcoin was created, there was nothing, it was just only one. So when other coins began to spring up, there was need to create an exchange. All right, the initial idea of creating an exchange was where you can exchange Bitcoin to another token. Okay, where if you want to exchange Bitcoin to Ethereum, or you want to exchange Ethereum back to Bitcoin, that was what gave birth to exchange. All right, so here we are, as an exchange. This is Binance, all right, which is one of the biggest exchanges of today. It wasn't the biggest exchange 2-3 years ago. No, they started in 2017 because I know back then Bittrex and some other Poloniex, and some other bigger exchanges were actually topping the chart then. But as of today, Binance is sitting on the #1 spot, followed by other major exchanges. So what brought about exchange? What brought about exchange is the need to exchange one coin to another coin. All right. So we're going to be using Binance because it's one of the major exchanges, that we have in the space. So it's good for us to use it so that at your own time, it will be easy for you to actually get these things across. So now when you come into an exchange in Binance, for instance, you have different kind of trading you can carry out on this exchange. Remember, the main aim of an exchange is for you to exchange one token or one coin into a token or vice versa, anyone that you want to do. Okay, so I'm going to go back to the main page of Binance. Now, when you want to trade on Binance, you can choose to decide what you want to do. Okay, so if you can swap you can just come, maybe you want to swap Ethereum into Bitcoin, just swapping, you're not trading. All right, you can swap. All right, this is let me leave futures yet. That's where we are going, but we'll soon go there right now. And just go to the normal website. Okay, so this is a normal website. So if you want to trade, you can convert. Convert means you just want to swap. You have some Ethereum, you want to quickly swap it. You want to quickly swap it into USDT, or just very fast. You just convert it. That's when you use the convert. Okay. But with experience, it is always good to use the market. You pay less fees when you do that. Okay. So now, if you're not swapping and you want to carry out some spot trading, okay, you use the classic view. Okay. Yeah, when you open the classic, it shows you where you can actually, trade one coin against another coin. For instance, here we have BTC against USDT, right? You can see the current price. And anytime you open an exchange, the first thing you're going to see is you're going to see the chart. Okay, there's going to be a chart that shows you, what is going on with that particular pair you're trading. And if you want to trade, if you come into an exchange, pay attention to, the markets that are available on that exchange. Like in Binance, for instance, we have different markets here. Okay, you see, we have the BNB market, we have the Bitcoin market, we have the alts market, and we have the fiat market. That's why we have all this fiat. These are all fiat markets. And fiat market includes even the stable coins like the USDT, the BNB, and the rest of the BUSD, and the rest of them. Okay, so let's assume that for classic trading, we use it mainly for spot trading. Remember, our topic is spot and futures, right? These are two different kinds of trading. So for spot trading, you can only trade in one direction. For spot, it's just like saying, I want to buy, let's assume Ethereum, current price of Ethereum now should be around $2,000 thereabouts. Or Bitcoin, for instance, one Bitcoin now is about $37,000, right? Now, you want to buy one Bitcoin, okay? And based on your analysis, maybe you've done your homework, you've built your trading skills, and you've studied the charts, and you've seen that with the way the price of Bitcoin has dropped all the way from 58, almost 59,000 up to currently at $37,800. So now you've done all your analysis, and you're very sure that maybe by this time tomorrow or next, the price is going to be around 50,000 or even around 42,000, right? So if you have done your homework, or you now know how to trade, how to do your analysis well, and you want to buy one Bitcoin and say, okay, I'll buy at 37,000 and I'll sell it at 42,000. So what are you doing? When you come to Binance with depending on how you are able to get your funds across here, you can just buy, if you have a Binance account, you can actually get your Bitcoin wallet address. For some of our newbies who are not used to exchange trading, this might look a bit strange, but it is not strange. Okay, so let me just break it down for some of us who are new. I know some of us already know this, but let us just break it down. Now, if you are new, all right, there's a whole lot of work you need to do. But what we're doing today is a general overview of how you get here, how you can do one or two trading for yourself, all right? In terms of learning how to trade, I'm still going to show you how you can become a pro in doing that, okay? But if you want to, I just give a scenario. If you want to buy Bitcoin now, and maybe you think it's going to go up in the next 1 or 2 days, maybe to 42,000, where I have my white line here. You can see at 42,500, I have my 50 EMA looking at me there. So if you think it's going to come here in the next 1 or 2 days and you want to buy, what do? The first thing you want to do is, if you have to buy into an exchange account, because if you buy that Bitcoin, maybe you buy with a mobile wallet, like maybe I think you can swap on Trust Wallet, but maybe you use some other decentralized wallets, and you buy that Bitcoin. Now, if it goes up to 42,000 tomorrow, you know, someone is trying to join in. 1 minute. Okay. So if it goes up to 42,000 tomorrow, you need to quickly sell it out, or else if it drops back, you lose your profit. So in order to avoid that, what most people do is that they come to a major exchange where they trust. Remember, there are thousands of exchanges, but not all of them are reliable. Okay, I know what I'm saying. I've been a victim to, exchange exchange scam, so to say. An exchange just closes down and your thousands of dollars are gone. I've been a victim to that. Okay, so when you talk about exchange, you must make sure you're trading on an exchange that is reliable. I mean, everybody in the crypto space knows that Binance is reliable, because Binance is I would say, is number one in terms of volumes, in terms of trade volumes. Okay, so when you trade with big exchanges, you're more safer than trading with some new exchange that are yet to have their foothold. Some of those exchanges, if anything happens, sometimes maybe their hot wallet is hacked, and maybe a lot of money is stolen, they might not be able to refund. So a whole lot of things happen. Okay, but we're not talking. We're not. I'm not going to talk about exchanges much, like you know. But I'm going to touch that. But let's go straight to business. So when you get to this exchange because you think the market is going to go up, now you want to spot trade. You're spot trading because you want to just buy and hold it, and by this time tomorrow, if it goes according to your plan, you would have made approximately close to $5,000, because if you buy at 37,000 and it's 42,000 tomorrow, you've made $5,000, right? Now, when you're on the exchange like this, you can convert your Bitcoin straight into the fiat market. Remember, I told you when you come into an exchange, you look into the various markets you have. For instance, I have other exchanges here. In fact, I can't even remember how many exchanges I trade on. Yeah, just too many. But let's just limit our take on Binance so we don't get it confused for newbies. All right, so look at the markets here. Look at the fiat market where you have your USDT. So now you buy your Bitcoin at 37,000. All right, now, and tomorrow it's already where you predicted based on your trading skills, which you've mastered. And tomorrow you're seeing it at 42,000 and you want to take your profit. So it's very easy if you're on the exchange. If you are on the exchange, all you need to do is simple. Now, when you look at every spot trading market, you would always see, I can see someone is trying to join in, or you're raising your hands. If you have any question, just type it on the chat box. Okay, there's going to be time for some questions here. Okay, so now if someone is trying to join in. Okay, so what I'm saying is, if you want to get your money in here, for those who are new, for the sake of those who are new, okay, after you've signed up, you can do your KYC, and once you have your account set up, there are so many ways you can actually, bring in your money here. Binance has a system called fiat/spot. Okay, you can deposit via fiat currency. So if Binance supports your country's fiat, you can actually make deposits. For instance, if you check here, you would see the few countries where you can pay directly into Binance using your banks. Okay, you can send money from your bank into your Binance account straight up via fiat. Okay, not in every country though, but there are countries that application is supported. So if you're in one of those countries, all you need to do is make your deposit via fiat. I think our network is kind of slow. I'm trying to open here. Just a minute. Let me show you. Okay. Someone is trying to come in. Okay. So now, if you want to, let's assume you're just coming in, you've just signed up. Now you have your Binance account. You want to buy some Bitcoin, because you've already done your analysis and you think that the market is going to go up tomorrow. You want to quickly buy now and sell tomorrow. What you're doing is that you're spot trading. So what you'll do is, because you have an account on Binance, I forgot to say this. Once you have an account on an exchange, automatically you have a wallet of all the coins that are traded on that exchange. Okay, so because you have a Binance account, it means that every coin that is traded on Binance, you automatically have a wallet for that coin. So you want to buy Bitcoin, you want to buy USDT, whichever way you want to, bring your money into Binance, you can choose whichever way. And by doing so, you can go to your click on wallet overview. When you think this platform is a bit slow, you're having a okay. So when you place your cursor on wallet, it's going to show you a list of options where you have wallet overview. Okay, and that's where we are right now. So when you come to wallet overview, you can actually deposit, you can withdraw, and you can also transfer funds within Binance. Okay, so if you want to bring in funds into Binance, you simply click on deposit. So when you click on deposit, it's going to give you a couple of options. Do you want fiat deposit, or you want crypto deposit, or you want peer-to-peer? So depending on how you want to bring in your deposit, like I said, some countries you can deposit directly from your fiat. Okay, you have to bear with me. I think good. This is what I was trying to show you. Our network is a bit it's fooling a bit, but no problem. So this is deposit fund. These are the options you have. You can deposit via cash, via if you're in the UK, you can deposit using your pound sterling. You can deposit using your euro if you're in Europe. Okay, and some other countries, I think some other countries in sub-Saharan Africa also have that that option as well. I think the Naira has it, the GHS has it. I think the Kenyan shillings also have. Uganda, I think Uganda has as well. So some of these countries have these direct cash deposits. Okay, you can also deposit using your credit card. Okay, so peer-to-peer is also there. Peer-to-peer, the peer-to-peer method is also there, which means when you talk about peer-to-peer, it's just like a platform where Binance will stand as an intermediary between you and who you're buying from. Okay, so you can use the peer-to-peer method by buying from major agents, okay, who are registered. Now, but the best option sometimes is to use the crypto deposits. If you have someone who wants to sell some coins to you, it is better you use the crypto deposits. So when you choose the crypto deposit, it's going to bring out for you a list of options containing all the coins that are being traded on this exchange. This method applies to every other exchange. Okay, so clicking on deposits is going to bring out every coin. So when you click on this search box, every coin that is traded on Binance is going to bring them out for you. So once you click here, just type the name, just search. You can scroll down and just type the name of the coin. So long as it's listed on Binance, you can make that deposit. So let's assume, for instance, we are using Bitcoin as a yardstick. Okay, so this is Bitcoin. Automatically, when you open any coin, be it Ethereum, be it USDT, any coin you click on is going to show you an equivalent wallet address associated with that coin. All right. So for Ethereum, for instance, we have the ERC20 wallet address. We have the Binance Chain, the BSC wallet address, and we have the BEP2 wallet address. These are different chains, different networks on Ethereum. Okay, so if you choose ERC20, it means when you're sending your Ethereum, you must as well choose ERC20. Okay, so that you don't make mistakes with the chains. That is for Ethereum. But when it comes to Bitcoin, it's just one single root. Okay. So for BTC as well, because you're on Binance, you still go through the Binance chain as well for BTC. Okay. We also have the SegWit, segregated witness. But this is a wallet for the main BTC network, the one that will go through blockchain.com. This is a wallet for the main Bitcoin network. So once you copy this wallet, you send it to whoever is sending you Bitcoin. Once it sends it, it appears here. You can always check your balance. Just come to wallet and click your overview. And you can always see your balance at every point in time. Okay. So when you have this, the next thing is for you to trade. Now you have your money in your exchange. The next thing is to trade. So how do you want to trade? Do you want to, because of the scenario that I narrated, in this case, we want to buy, you want to buy some Bitcoin and sell it tomorrow because you think it's going to go up. Now, let's assume you bought your Bitcoin. In the chart here, you're going to be seeing, you can see the chart here is BTC USD. This shows you the current price of the market. All right. It shows you the various markets that you can trade in. So we have this very, very important section here. Remember every coin, every pair, like the BTC USDT pair, you can either buy or sell, right? That's what you do on exchange. Okay, you buy and you sell. So when you say you're buying, what it means is that you're trying to use your dollar, for instance. Okay, I think I have about $1,500 here. So you're trying to use your dollar to buy some Bitcoin, right? So how do you do that? Very simple. You have a couple of options here. You have limit, you have market, you have stop limit. Okay, but one of the most popular ones you're going to be using for spot trading is the limit and the market. Remember, because of your knowledge, okay, and you already sensed based on your knowledge, so to speak, that Bitcoin is going to be at 42,000 tomorrow. So now you bought one Bitcoin and you want to hold it to tomorrow. So you can decide to use limit to set at that price that, okay, by tomorrow, I might not be around. I might not be having time to, be looking at the market to know exactly when the price hits 42K. Because if the price hits 42K and you don't take it and it drops back, that profit is gone. Okay. So what you can do for yourself with the help of limit is that you can set the price of exit. Okay. You can set the price of exit. And how do you do that? If you already bought your Bitcoin, for instance, okay, if you bought your Bitcoin, for instance, you just set the price that since you bought at 37,922, you're going to set the price at 42. That when it gets to 42,000, I want to take out 100% of my Bitcoin. So when you place this sell right now, it's going to create an order. You can see an order has been submitted, right? This order will be here. This order is going to be closed anytime the market touches 42,000, whether you're on Binance or you are whatever you are, doesn't matter. The market is going to close that order for you and your profit is going to be intact. So these are the reasons why people use exchanges. You can do this using a mobile wallet. Okay, if you have your Bitcoin in your wallet, you cannot do this. And if you have your Bitcoin on your wallet, and even if the price goes to 50,000 and you don't close it and it comes back down to where you bought yesterday, you've lost that profit. You just have to wait for another time because there's always another time in the crypto space. Okay, so that's how you use limit. You can use limit to set the price. The same thing happens if you want to buy. Let's assume let's assume what we bought was dollar. For instance, here we have about $1,500 or thereabouts. Okay, so let's assume that based on my analysis, I've realized that, okay, Bitcoin is likely going to touch 44,000 backwards before going up. So what do I do? Instead of buying at 38,000, it's actually at 38,000 now. So instead of buying at 38,000 and, allowing it to drop down on you to, put you in a loss before going back up, you can actually use your limit and set the price at which you want to get into the market. Okay. This person has been struggling to come in. So with this same limit, I can just set the price at 34,000 and I'll just choose 100% of it, buy at 34,000. Once I click on buy on limit, once I click on buy, instantly the order will be created for me. So I have two orders here waiting to buy, one at 34,000 and the other to sell at 42,000. So this is what we use limit to do. This is for spot trading. All right. Remember when we are spot trading, we can only buy in one direction. We only make money only in one direction for spot trading. We buy low, we sell high. So if you're a spot trader, what it means is that you can only make money anytime you buy low and the coin goes up and you close it back in dollars. And the USDT that you're seeing here is a stable coin. For those who are new, it's just like your normal dollar. So if you make profit and you sell it, if you buy any coin here, not just BTC, any of these coins that you see here, thousands of them. So if you buy any coin and it goes your way and you make some dollars and you put it on USDT, it's stable. It's going to remain at that amount. It doesn't matter how, even if the price drops, it doesn't concern you. Okay. So that's the usefulness of stable coins. Okay. So that's how we use spot trading. Now for market, when we use market for instant execution. Okay. Like for instance, at this point in time, you already know that, man, the way this price is going, this is the time to get in. There's no time to place any limits. Very simple. You have your dollar already. Just look at the percentage you want to use out of your dollar. If it's 100%, boom, just click on buy. Instantly, you're in. The same way, while on market, if you think the market has gotten to a price where you think, man, it's time to take this money back into dollars, you just sell as well. Choose your percentage and sell very fast. All right. And one of the reasons why most people, when you're trading on an exchange, you have to be very selective is because most exchanges do not have enough liquidity. For instance, if you're trading on a big exchange like Binance, your orders are closed almost instantly because Binance partners with a whole lot of liquidity providers. There are special companies that provide. I remember when Binance started, if you followed Binance when they started 2-3 years ago, one of the reasons why they were able to climb to the top so fast was because when they started, they actually partnered with a lot of liquidity providers. Liquidity providers are people who exchanges partner with to help them close all their orders very fast. Remember, in an exchange, okay, it's mainly a platform where you are buying, someone else is selling. So without liquidity providers, without extra money available, seated to close deals, it will be very difficult. It will take long for deals to be closed. Okay, for instance, you have your dollar, or let me say you have your dollar and you want to buy BTC, right? Or you have BTC and you want to swap it to Ethereum. Now, when you click your buy, if there is no enough liquidity in the market, it will take some time. That's why you go to some exchange that has low level of liquidity. And when you're trading on those exchange, when you click on buy or sell, you will see something like pending, even though the market is supposed to give you instant execution. The limit is the only aspect that is supposed to show you pending. But for the market, it's supposed to be for instant execution. So when you go to an exchange and you want to buy something instantly using markets, and it tells you pending when you place your order, man, that exchange have low liquidity. It's better for you to get out of such exchange, because if you trade on such exchange and you make profits and you want to sell back into dollar or you want to convert back into another token, but because it is pending, the market might even drop on you before that order will be closed. So that is for liquidity. Okay, so very, very important. All right, so that's how we use spot trading. So for spot trading, you're only buying low to sell high. You cannot trade downwards for spot trading. Okay, so spot trading, most people prefer spot trading because for spot trading, you are actually buying an asset. When you're trading spots, you're buying an asset. Okay, which means even if you buy Bitcoin at 38,000 and it drops back to 32,000, so long as your Bitcoin is there for you, you have no problem. Because if the price goes back up to 38,000, you have your money back. That is for spot trading. You're actually buying an asset. Okay, but for futures trading, you are not buying any asset. You're rather doing what? Speculating. So if your speculation is right, you make money. If your speculation is wrong, you lose money. All right. So that's what we're going to be doing next. Okay. Now, in the in-depth part of our training, we go deeper into how to be successful in trading nowadays. But this is more like a general overview for you to understand, how spot trading and futures trading work. Okay. So let's move into futures trading. Now, we're using Binance as an example. If you have an account on Binance already, because you can do spot, you can actually do futures trading. If you're new, you just need to do one or two quiz to show that you understand the risk behind. Remember, you're moving from normal trading, which is spot, to advanced trading now, because when you begin to trade futures, you're going to be trading futures the same way you trade Forex. For some of us who are used to other markets, the same way you trade stocks. In other digital assets, you speculate. All right. When you go to the Forex market, you use your lot size, you place your buy and sell order. If it goes your way, you make money. If it goes against you, you lose money. Okay. So that's the level, that's the next phase of trading. So there's going to be some small quiz that you have to take for you if you're new. Okay. Binance will want you to take that quiz just to be sure that you understand the risk involved, because in futures trading, you're not buying any assets. You're just, speculating if the market is going to go up or if it's going to go down. And for you to be successful in that phase, even here, we're going to discuss how you can be successful in it. So to go into futures trading, we have just come to derivatives. We have the USD futures market. We have the coin futures. Okay. We have other leverage tokens as well, but we're going to be focusing on these two. So this first one simply means that when you're trading your futures, you're going to be using some USDT, some stable coins. So now you're going to be staking some coins, some USDT for your trading for futures. Normally, what I advise people to do, for instance, in most of my accounts, I trade both. It's good to trade both futures and trade spot as well. But if you must trade futures, you must have understood how the market works. So you begin from spot trading, where you buy an asset, do your analysis, it goes up, you close it on USD, it goes against you, you relax, it comes back up, you get your money back. So when you understand how to navigate your way properly on sports, then you can now come into futures. So what it means is, if you have a $10,000 portfolio, for instance, you can decide to, put in 8,000 for sports and 2,000 for futures trading. All right. Like for me, for instance, I always like to take my profit, and most times I don't like keeping so much on exchanges because of my previous experience. I'm always very careful, keeping a lot on exchanges, because even though we trust many exchanges, but just manage your risk. Okay. Risk management is very, very paramount if you must succeed in this space. So exchanges, no, public exchanges, don't keep so much in, but as you trade, try to take as much as you can take, because you never can tell. But make sure you trade with big exchanges. Binance is a very good example. At least they've stand the test of time for they've been there, and they don't seem to be going anywhere. So this is futures trading. All right. In futures trading, we have the USD futures. Okay. We have the coin futures. For coin futures, it means that the currency that you'll be staking here for your trading will be mainly Bitcoin, all right, or BNB. Okay. But for USD futures, the currency that you're staking here is stable coins like USDT or BUSD. So what you're doing here is that the dollar that you're bringing here, you're not going to be using it to buy coins here. You're going to be using it to do what? To speculate if the market is going to go up or if it's going to go down. Like I said, in this place, it's a bit riskier than the spot, because if it is spot, if you buy a coin and it drops on you, you can wait. If it comes back to that price tomorrow, next week, whenever, you still have your money back. But on futures, if you say the market is going to go up and it goes down, you lose your money. You're not buying any asset. Okay, so if you understand the difference between the two, can you just type on the chat box before we proceed? Type on the chat box if you understand the difference between the spot market and the futures market. These are two different markets, all in one. If you understand the difference between the two, just type on the chat box, just to be sure you're following. That's it. So I can see some people saying, okay, I understand. Good. I like that. Okay, good. Pascal says she understands. That's okay. All right. So I believe every other person is following. So when you come into futures trading, that's how it works. On futures, you're gonna be, speculating, practically speculation. But it's quite cool if you look at futures. You can make a whole lot from futures with a little, if you understand how the market works. So you will be putting yourself at a very high risk if you don't understand about the market and you think it's just about gambling. You don't gamble in the market, especially when you're trading with real money. All right, you don't gamble. Do your homework. If you do your homework, you can make a whole lot from futures. And one good thing about futures is that if I decide to enter this trade, for instance, and in the next 1 minute, I notice that this candle is not doing what I want it to do, and maybe there's some small loss of about $5 or $10, you can just close it and wait for another opportunity. But if it is spot trading, that's another major difference now. If you are on spot trading, for instance, okay, as you buy, let's say you have $1,000 and you buy a coin worth $1,000 on the spot market. If you buy a coin worth $1,000 on the spot market, they might be taking a fee of about $10 to $20 for you to place that order. Now, when you buy that coin and maybe it's dropping on you and you want to quickly convert it back to USD, you will discover that out of that $1,000, for making that simple mistake and that simple decision, that $1,000 can come down to like 900, if not $850 within a space of a few minutes if you don't enter well. All right, that is the disadvantage. It's like somebody's trying to join in. That is the disadvantage of spot trading. Okay, for spot trading, because of the fee involved in swapping from one coin to another, you can even waste more. All right, so what you do when you're spot trading is that when you buy, you just hold. You can only close when market goes above where you entered. If you close when market goes above where you entered, the fee will be taken, but the difference will not be much on your main capital. Okay, so but when you are in spot trading, even if you're trading with $1,000, as soon as you enter this trade, for instance, I'm going to give you an example. Let's assume, actually, let me go to a more simpler token, because I kind of did some withdrawal today, so I'm not really, Okay, now let's take a look at this market. This is Matic. Okay, for some of us who don't know Matic, Matic, one of this very nice coin. I've been trading this coin for a couple of weeks now, and it's been very, 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 very nice. So I'm going to teach you some of it, little skills you need to succeed here. But let me show you what I mean. For instance, now, based on my analysis, what I'm seeing here, the market is still very bearish. And if I come here, for instance, I'm here, there's about $279 here. Okay. Now, I think that, okay, based on what I'm seeing, this candle is very bullish, and this is the last hour. Then the next candle is likely going to be bullish, okay, based on what I'm seeing here. So if I agree to that, I'm going to wait for the next candle to start forming, and I just buy in. Maybe I can buy in like 100% of my total funds. Remember, the limit in the market, it can still be used there as well. But another feature that we have here is the TP and the SL, the take profit and the stop loss. Because here we are not buying anything, you can actually do what? Enter your stop loss. In case you enter the market wrongly, or whenever you're trading, okay, it's advisable to use a stop loss, because some of us know the effect of fundamentals. Things like we've seen what has been happening in the space. I'm going to talk about that before we round up. But because of certain fundamentals that goes against technical analysis, no matter how good you are technically, always use your stop loss. Always use your stop loss, and make sure it is your risk reward ratio is always correct. Your risk reward ratio should always be between 1:2 and 1:3. 1:2, which means you're losing $1. You prefer to lose $1 to get $2, all right? Or you prefer to lose $1 to get $3. So if, for instance, in this almost $280 account for this particular trade, okay, I can decide to say, okay, if I'm going in 100%, but before I conclude, I'm going to teach you guys, let me teach you guys margin, okay? Let me show you guys, let me just show you guys around. For some of us who are new, who are not new today, who are not used to this. Now, the way we trade here, remember I said here, we are not buying a coin. We are only speculating how the coin is going to go. If the coin is going to go up or if it's going to go down. You are only speculating here. So which means if your speculation is wrong, you lose money. But if your speculation is right, you make money. So how can you be right in your speculation? By understanding how the market works. How can you understand how the market works? By understanding how the candlestick patterns work. All right. So it is what it is. I'm going to buy in here right now. You can see me trying to buy. Here's market. I'm going to take, let's say, I'm going to use like 100%. Okay. So you just buy long, boom, and you're in the market. That's how it works. So now I'm buying into this. And what I was trying to show you earlier is that look at where I bought into this market now. Okay. Now look down and see. You can see instantly made about $4. The more it goes up, I bought, which means my speculation is that I just said it that based on my understanding of how the candle forms, I know that since this candle closed bullish, the next candle here is likely going to close bullish. And I already have my indicators here at exactly at this line, this yellow line, telling me that there is a resistance here, which this market is likely going to hit at the end of the day. So I can put my profit here, all right? And I can also put my stop loss here in case it decides to go back bearish, which is very, very unlikely because this candle indicates the beginning of a new U-turn. There might be a reversal when it hits this first EMA, which is 13 EMA. If it struggles with the 13 EMA, it might drop down backwards, but this is an indication of what? A bullish trend. Okay, so but no matter how sure you are, you can just peg your stop loss somewhere around here. That okay, if this guy decides not to break this, if he decides not to break this red line, which is the 5 EMA, and decides to drop back down, once he hits this line, just take me out of the market, I'll be fine. So that's how you actually trade here. So what I was trying to say before is that let's assume this market turns back and start going against me. In my own analysis, this candle is going to be green at the end of the day because it started very bullish and the bullish trend is strong. So if he changes his mind and start changing red, and I think, man, this candle is going to end up red. What do? While it's changing red and you see that it's against your analysis, why this one is good is that if I want to close this position, I can only lose if, let's assume it is going against me, all right? Even though now it's going up, but let's assume it's going against me. You wouldn't lose more than what you're seeing here on the profit and loss. So that is how good this one is. But if it is for the spot trading, once you buy in and you want to jet out immediately, it's going to cost you a lot. It can cost you 5% of your account. It can cost you a lot of money because of the fee involved. Okay, so that is the challenge with spot. But for futures trading, you're actually good. So long as this is going up, I can decide to close it at the end of this candle. Whatever amount is there, I can decide to close it. If I think the next candle is going to drop, you can close it. And remember, everything you're making here is actually coming to you in USDT. And you can sell your USDT directly for any fiat currency. You can sell your USDT for any fiat currency, for pound, for dollar, so whatever you make here, you can sell it instantly. Okay, so how did I know that this market is going to be going up? That's the next phase we're going to be looking at. But it's not a one-time thing, but if you have the foundation, you can grow. Okay, so now if you want to trade here, on futures, you need to look at, we have various options. You can see here we have the margin. Okay, this is the margin or the leverage. Okay, now you can see my leverage here is using 2x. This leverage, you can increase your leverage to as high as 50x. Now let me explain what it means. Now this is an account of about $280, and I'm trading on this is a small account though. I have my bigger accounts. So this is 2x. So what 2x means is that for this account of 280, all right, because I chose 2x, 280 times 2, that's almost about close to $600, right? Sorry, I have to do that maths. Sorry, 280 times 2, that's about $560. So what it means is X2 simply means, I want to open an order of $560. So the order that has been opened for me, this order I entered now, is an order of $560, which is for 2x. So if I change this to 3x or 4x, it means you multiply you multiply your capital times 4. The capital you're staking times 4. So in this case, it would be 280 times 4. So which means the volume of the trade I'm taking and placing is a volume of $1,220. So what it means is that with the help of leverage, you can use small amount of money and place high value order. If you are good in your market analysis and it goes your way, more profit for you. The more it goes your way, the more money you make. So it means that if I use 4x and I'm trading at I'm opening a position size of 1,120. So what it means is if the market goes up 10% or 20%, so it means I'm going to make 20% of $1,120 and not $280. So I'm going to make extra, profit. You see, if it goes your way. Now, what if it goes against you? What it means is that you're going to lose 10% of $1,220, which if you do 10% of $1,220, 10% times $1,220, that's about $122. That's almost half of the capital. So if I go by 4x on this small account and it goes against me by 10%, you've just lost half of your account. So if it goes up your way, you've just made half of your account. But because of the size of this capital, it's not advisable to trade up to 4x. That's why I brought it down to 2x. I actually, withdrew some today. So normally I trade on 5x and 10x, but that's for major capital, all right? But when you're trading with small capital, you adjust your leverage so that your risk level will be very minimal. Okay, so with 2x, it means I'm trading within the range of $560, which means if the market drops on me even by 20%, 20% of 560, 20 times 560 is going to give you 1 minute. Okay, so 20% of 560 is 112. Okay, but if you really know what you're doing, if you really know what you're doing, you're likely not going to open your eyes and wait for the market to drop by 20%. Okay, now let me show you what is likely going to happen for this candle, this new candle that you see. This candle is going to end up being a bullish candle. Okay, even if at the end of the day, it closed bearish, which is very unlikely. All right, it's going to consolidate here and later meet at a point where this 13 EMA is going to become a very strong resistance. At that point in time, you are still less than 10%. You can see here the profit and loss here right now. You can see it's just around around 0.01. Okay, 0.01. Okay, so what you need to do is limit your leverage according to your capital. Don't take a $1,000, a small account like a $1,000 account, and you go use 5x. Yes, 5x on $1,000. You're opening a trade worth $5,000. Good. If you understand the market and it goes your way, you make more money. But what if it goes against you? You can blow that 1,000 within a twinkle of an eye. So if you are a beginner and you've mastered some of the tips we're going to talk about briefly, you can begin by even 1x. Most times, people who succeed in trading are not those who become too greedy. All right, you just bump into futures and you just think you can use 20x. Well, you might use 20x and you gamble, it might go your way, but you're not a trader, because in the next few minutes Even the next day, if you try the same 20x, it can knock your account off. And remember, one thing you must know at the back of your head is whatever you lose in futures is gone. You just have to trade it back and make it back. It's gone. You're not buying any coin here. So because you know you're not buying any token here, which you would say, oh, the price is dropped. I just have to wait for the price to recover and then I get my money back. Here, you lose money here, it's gone. You're not going to get it back except you trade it back and make it back. And if you're the type that is using high leverage on small capital, you're gonna have a very bad time with futures. So many people have been wrecked with futures because they lack trading, technique. They lack financial management. All right. So, but when you use normal leverage, which you can manage, you can do very well in futures. I'm going to be talking about some other tricks we have in futures trading, but let's take it one point at a time. Okay. Please, if you're following me, just type on the chat box. If I'm spending more time on a particular topic, type it on the chat box. Maybe I can speed up. I'm just trying to break it down for those who are still new. And I think we still have about 15 minutes more to round up this session for today. So within now in the next 15 minutes, I'm going to try to cover as much point as I can cover. Remember, you cannot just you can learn all these things in a day. Okay, you start from somewhere. Okay, so I'm going to take us into some slides to tell us some of the secrets behind successful trading on futures. Now, when you can see what I said when this candle is about to start. You see, I didn't mince words. I didn't guess. I didn't assume. All right. I know that this candle is going to be bullish. Why? Because of my understanding of the candlestick formation. Now, the secret of success in trading in any market, any digital asset, is to understand, how the market is moving. All right. And market movement is determined by so many factors. Because in a market, it's more like a tug of war, between two different set of people. One person is saying, the same way I bought here, the same way I knew this candle was going to go up and I bought it, that's the same way someone is thinking, man, this thing is going to drop and it's sold. So different people with different decisions, right? So those who make money are those who understand the right decision, who know how the market is going. It's not rocket science. You need to understand the candlestick pattern. If you understand the candlestick pattern, it's going to help you a lot because every digital asset follows a particular pattern. And so far, so good. The best way to understand the market movement is using the candlestick, because the candlestick shows you the opening price, the highest price, the lowest price, and the closing price. No other market indicator does that. The line chart, the bar chart, those are very scary to use, especially for newbies. So, but when you're using the candlesticks, when a candle is changing to green, it's telling you something. Let's take a look at this scenario. You can enlarge your chart here. You can enlarge this chart. Now, look at this chart, for instance. Now, I mean, common sense will tell you that, there's been this red candle coming all the way. And after some time, it starts forming a U-turn. So now this U-turn, every time the market drops, it gives us a sign. You can see this is a sign here, which many traders tend to ignore. When you see the M formation, this M formation, stop buying. Just take advantage of the downtrends. Only buy on U-turns. Okay, we're going to go deep into that. But when you see a market which has been bearish and all of a sudden is changing its direction, the market is showing you that something is happening. Some set of new people are beginning to buy on the upside. Remember, at this point, people sold off. Traders sold off. Many people started selling. It dropped. And now they've started buying again. And that is why for some of us, for those who are holding some coins and maybe it has dropped 50% or it has dropped 60%, if you understand how this market works, you will just go and sleep and relax yourself. Don't close it. Because if you close it and you wake up tomorrow or next tomorrow and it's back to where you bought, it will hurt you even more. So just hold it, because in this market, history always repeats itself. Okay, so that is how the market works. So now something is happening here, and that is why the candle is changing. So after this formation, we have what a system we'll call it the 1, 2, 3 step formation. If you can apply the 1, 2, 3 step formation, you can be a successful trader. So now all I need to do, as you know, with my understanding of U-turns and candlestick patterns, when you begin to see new set of candles forming, okay, what you need to ask yourself is, what you need to check on yourself, you need to check to see how authentic is that U-turn. Remember, this was also a U-turn, right? But this is not an authentic U-turn. And there was a reason for that. The reason is because the resistance is still very strong. You can see the 5 and the 13 EMA could not be broken. And then he further pushed it down. The same thing can happen here. If this guy hits this yellow line and he struggles to break it, just like what happened there, the next candle is going to be very red. It's going to drop down again. But if he breaks this yellow candle, there is every possibility that because these two resistance lines have been broken, 5 and 13 EMA, because they've been broken, there is every likelihood that we're going to have next 2 or 3 candles touch the 50 EMA before the reversal will take place. So as a good trader, while the market is making its U-turn, you are already looking at the next resistance of where the next reversal is going to take place, because market will always reverse. So if you understand this, you wouldn't need to stress yourself so much. You just enter a trade where you're supposed to enter, it hits your resistance line, struggles with it, one candle, the next candle, you're out, and then it drops down. You can even sell it downwards. So one good thing I didn't state here about futures trading is, remember I told you guys, when you're trading the spot market, just right now when I'm talking, I've just made $22. I just have to close it and take it and wait till the next, I'm going to wait till like the next, this is 2:18. Sorry, this is 18 minutes past this hour. I'm going to wait till like 30 minutes and see what this candle is going to do. Sometimes when bullish candle push like this, sometimes they push back, prepare themselves for the new run. Okay, so if you understand the market, with this one candle, you can take advantage of all the moves, even on before the 1 hour is finished. Now, if you watch this candle, it's likely that maybe after some 5-10 minutes, it might drop back. It might drop back to this line and you enter again. So before the end of the 1 hour candle, you might have made even up to 10 to 20% of your capital peacefully, if you understand how the candles form. So everything I'm doing here is based on the understanding of the candles. If you don't understand how candles form, you cannot be successful here, and you cannot afford to gamble with your money, except maybe you have a lot of money to throw around. Okay, so what are we going to be looking at? Let's look at some of the few things that can help you do well here. So how many of us have an understanding of the futures market now? Can you type on the chat box if you're following what I'm saying? If you're following, if you're learning 1 or 2 things about what I'm saying, because this is live trading, we're not assuming anything here. We're in the same markets that you're going to be trading on, and everything we're saying here is exactly the way it is. So if you're following, I'm sure from now, if you've been trading before, you must have learned 1 or 2 things that will help you trade better, when placing your next trade. So what are those things that will help you successful? Let's go. Let me show you some of them here. Now let's look at some of them. Okay. I just talked about candlestick applications. So your first assignment is to go study candlestick formation, how they form. Okay, for those who would like to learn some of those, some of those tricks, because the candlestick itself is another It's another world of its own. All right. If you want to understand some of those tricks in it, you can maybe after this session, you can decide to enroll in our training. Then we go deeper. Okay. And you also benefit from by joining our live trading session 24/7, which means you can trade what you are trading. You can, analyze what you are analyzing 24/7 we trade. Okay. Our session is always open 24/7. You can plug in and, you can trade the market with us. That's for those who are taking our course, our program. Okay. So, and when you talk about the candlestick pattern, let's look at some of them. So this is what will determine how successful you'll be if you understand how these candles form. Okay. And whenever you're trading any digital assets, I advise you to stick to the candlesticks. It's going to guide you. Okay, so these are the two patterns that we have. You can see someone is typing. Okay. Okay, this is a recorded session, so you can always watch again. I think my problem is going to be the size of the file, because if it's more than 2 gig, it's going to be very difficult trying to upload it to, very difficult. So now these are the candlestick pattern. So if you must be successful, in the two markets that I've showed you, if you must be successful, you must understand this guy. Okay, because the candles, the bullish and the bearish candles represents the actions of traders. All right. So when more people are buying, the bullish candle, aka the green candle, continues to form. All right. When people are selling, the red candle or the bearish candle begins to form. For some of us who are new, the bullish candle is derived from the word bull. Bulls have their horns on the upside. You've seen a bull before, right? The bear has its horn on the downside. So when people are buying, because I told you the market is a tug of war, it's a war, all right? It's a war. So when more people are buying, either as a result of sentiment or as a result of technical analysis or as a result of happenings, or like the way Elon Musk was talking, Elon Musk goes to his Twitter page and types, Doge is the future of cryptocurrency. Because of that tweet alone, millions of people across the world say, man, it's time to buy Doge. Elon Musk has just tweeted. So millions of people are buying just because of a tweet. And when many people are buying, they are moving the market in one direction, upward. So Elon Musk calls again the next day and says, Doge is good, but I think I would prefer Ethereum because they are now migrating to proof of stake, which will limit the use of energy in validating transactions on Ethereum blockchain. By the time he says that, people will tell you, man, it's time to sell Doge. Musk says Doge is not his best choice again. So people start selling. What happens? Doge moves to $5 and then drops to $1 the next day. So these are the reactions that determine the movement of the market. Okay. So, and whenever this is happening, you're going to be seeing this, you're going to be seeing it display with the green and the red candle. The green and the red candle will be showing you what is going on, if many people are buying or if many people are selling. So if you understand how the candles arrange themselves well, how they make their U-turns, how they hit their peak, and how they close when they hit their peak. Sometimes you might be in a trade like this candle, for instance. Let me take a good example here. There's always a good example. When you see some candles that start very bullish, very, very bullish, sometimes if you don't understand how far the market is going to go, for instance, this particular candle now, for instance, can you see this spike? This was a spike, right? All the way from, it opened at this price of, can see the line. Let me take the cross line so you can see it. Okay. Let me use this one, arrow. Okay. So 1 minute, please. I want to be able to show you. Let me use the cross. So now look at this price, where this market, where's this particular, I'm talking about this spike, this particular candle here. Now it opened at this price at about $2.32. and then spikes all the way to about 2 points, close to 2.7. So now for some people who don't understand how the candles work, for some people, when they see this spike, they start buying at this top. And before you know it, the candle drops on them. For some, they met this candle here. Because they understand how spikes work, they decided to wait until the end of the hour to see exactly what is going to happen. And at the end of the hour, they were able to save themselves the stress. The candle retraced normally, and then they buy low. And when they buy, they stay on profit. Okay? Now, so if you understand how this candle is formed, you can actually make good money just from one candle alone. Listen, for somebody who understands this particular pattern that happened here, all right? Now, you have a candle that is stuck in between. If you want to know the EMAs, right, use 5, 13, 50, 200. These are standard EMAs, proven standard EMAs. You can test it yourself. If you use it, you'll see how accurate it is. So when you see a market and close in this channel, the channel of 5 and 13 EMA, it tells you that this market is about to break out, because this particular candle, it didn't break this bridge. This is a bridge. The 13 EMA is acting as a bridge. After the first one, the 5 is broken. So because this bridge is not broken, the next candle is going to spike. So some people understand this fact and they bought right here. As soon as they buy, they see themselves on profit. So when you buy correctly in any market, as soon as you enter the market, like the previous candle I just bought, you see, I waited to the end of the hour of that first green candle, right? As soon as I enter the next one, I know the next one is going to be bullish. Okay. So, but how far bullish is going to be is what I don't know. And I made some money on the candle. I just closed it because I know I'm busy. I'm teaching. I don't want to come back to the candle and I should have closed it earlier. No, I don't trade that way. Okay. So I'm sure you've learned one or two things. So why do you need to spend more time on understanding the candlestick patterns so that you can take advantage of every move of the market? That is where the success is. So if you don't understand candlestick pattern and you're trading here, you're just gambling with your money. I'm sorry, but you're just gambling. So you need to spend more time, understand how these candlestick patterns work. And the best way you can actually understand this is for you to use the Forex MT4 trading platform. For some of us who don't know it, you can open an account, maybe a demo account with any Forex broker. Just download the MT4 platform. There you will see how this candle work properly, because in the Forex market, there's a whole lot of liquidity, more than the crypto market. So you see the candles more. You learn it there, and then you bring that skill here and apply the same thing, and you do very well, whether you're trading stocks, whatever digital asset you're trading. So this is what you need to understand, how they form. Okay, now when you understand it, sometimes you might not really need to be, to cram all the various formations of the candles, but if you can, fine and good. Okay, but what you need to understand is that whenever the candles are changing direction, you always know. A good example is what we have here. I mean, common sense should tell every trader, even though you're going to ask yourself, how far is it going to go? Is it really going up? You see, but you know already by what you're seeing here that the market is changing. So if you are the type of trader that you've already assumed here that the market is going to keep going down, and then you see this U-turn and the market is changing direction, what else are you waiting for in the market? Get out and buy in the direction of the market. And there are rules also. We have the 3 major rules that govern this market. The Dow theory. Dow theory says that the trend is your friend, all right? And also, the market knows what? Everything. You don't argue with this market. Remember, what you're trying to do is to understand how the market is moving. So you're not dictating to the market what it's going to do. You are rather trying to understand how the market is moving so that you can move in the direction of the market. Okay, so the market knows everything. So if you're the type that you, instead of you to sell here or here or here, when you see that the market is producing red candles and that the resistance line are, is very, very strong, pushing the market down. If you're the type that you didn't sell here and you came here to sell, and the next candle forms and closes like this, and you're still there selling, man, you're on a long thing. You should know that the direction is changing. So what you should be asking yourself as a good trader is this U-turn a real U-turn? Is this the U-turn that will lead to a spike on the bullish trend? Is it going to lead to a change in the market direction on the bullish side? So that you can know how many hours you're going to stay. Remember, we're on the 1 hour time frame. For some of us who don't know, these are what we call time frames. We have the 15 minutes, the 1 hour, the 4 hour, and the 1 day time frames. So you need to, I'm going to talk about time frames later. Okay, it's a bit in depth, but I will just try as much as possible to, touch 1 or 2 things about time frame. But it's very key. It's very key. So like what I told you guys about this candle, you see, I had to get out because I told you before this candle will complete this 1 hour, this candle is likely going to do what? Push back and even up to this level, prepare itself and take off. How did I know that the candle is going to do that? Many, many years. I mean, continuous practice, all right? Understanding of the candle, how they move. So if you understand how the candles move, you can do very well. You can trade well, except for some sudden fundamentals. We have some sudden disruptive fundamentals that don't obey technicals. That's quite, well understood. And that is the more reason why you should use your stop loss all the time. But technically, market history always repeats itself, technically. So market does the same thing over and over again. So because market does the same thing over and over again, that was how I knew that this candle will not just go up once. It's still going to push down and prepare itself. So as it is, now we are on the 33rd, 33 minutes of this particular candle. All right. This is a very good point to buy in again. You can buy in because before this candle completes 1 hour time frame, it's going to push back up and give you some other profit as well. You can see it's already going up there. So, but I'm teaching, so I'm not. So when you're trading, you pay very close attention to how the candle is moving. That is how you can be successful here when you're trading. Okay. So that is for candlesticks. If you want to study more about candlesticks, there are so many platforms to help you do that, but these are some of them that you can look into. You can see the same pattern here, very well explained here. You can see the doji star. Okay, when you see this doji star, is a sign of a what? The beginning of a bullish trend. We have a whole lot of them, which you can read up at your own time. But this is where, it doesn't mean you should cram all the whole candle patterns. Just use your common sense. Understand how the bullish candle forms and how the bearish candle forms. Understand how to apply your support and resistance. We're going to come to that shortly. I don't know if we have time. So if we still have time, I think we still have about 26 minutes. So we have various patterns, which I will not be able to explain all of them today. But if you type candlestick patterns, you can study as many of them as possible. All right. If you want to do more of the practical application, that we teach most of our students in our training, in our core training. Okay. So these are various patterns of the candle, things you should look out for. Okay. But sometimes in real time, when you see the market itself, you may not have time to decipher that, oh, this candle is it's a dodge, you won't have time to really see that picture because sometimes it doesn't appear to be clear. But one thing that will help you is if you understand how the candle is forming, how the positions are changing, you will be able to understand that this is a new movement of the candle. So you tell yourself, how far is this going to go? Is it going to break this guy? If it breaks this 13 EMA, then we are likely going to see something around here before the market revises. So if you're the type that you just place your trade and you think because of you, the market will keep going up, you're joking. The market will always revise. That's why we have the higher highs and the higher low. That's how the market moves. Because people make different decisions at various levels. of the market, right? So I'm going to go into the next point. I think I've talked a lot about the candlesticks. So I'm going to go into the next thing, and that's the Doe theory. I think you can read that. You can read that up too. Doe theory explains how individuals behave, in the market. Okay, for instance, when you have this kind of market, every market has that application of Doe theory. Okay, because market always goes up and comes down. Now look at this pattern, for instance. It's always there. So whenever you see a market going up and coming down, it's a reflection of what people are, people make different decisions at different times. Okay. If you look closely here, you will see the reputation of a Doe theory. Let me show you what Doe theory says. Some of us already know this, but for some of us who don't know it, Doe theory tells us the various patterns of the market. Excuse me. So this is the pattern, all right? Just similar to what you have here, just like what I was trying to show you. So you can always see it, but sometimes in the real market like this, it's not that visible. It's not practically visible most times. But if you look very closely, you can see it. I just showed you a chart just now before I opened this, something like this. I showed you something like this. Let me show you. Where is it? There you go. I just showed you something like this, that this is a good example of Doe theory. Exactly what you see here. It's exactly what happened there. Okay, so what happened? You see, there's an accumulation here when the market consolidates, right? Now, when it consolidates, because of the understanding of the candlestick, some people who understand how the candle works, as soon as they saw this U-turn, all right, people will buy in, get to this point. Now, people buy in, get to this point, they get out. Okay, the market drops a little and forms, level one. All right. So after that, the people buys again, it consolidates again and then drops down, comes back to the same level where it started. All right. And then takes up like that. So the same thing. So, but for the complete pattern of Elliott wave, this is a complete pattern where we have the higher highs and the higher low. Okay. So many patterns here, but what I want you to understand is this: market moves in a zigzag direction. Market never moves straight. Okay, so when a bullish trend like this, when the market begins a bullish trend, just like what is starting now, okay, you can't tell how far it's going to go, but your indicators can tell you. These indicators can tell you how far this market is going to go. It's very clear. Okay, so when you look at this trend, you will see the same scenario. This is the accumulation here. And why must you use why must you use your trend lines well? Now, if you look at the 200 EMA, you will see how many of us can see this accumulation sitting on the 200 EMA. This line you see here, this is a 200 EMA, this particular line here. Can you see the line? If you can see this line, type on the chat box. So this is the accumulation. Accumulation is that process of consolidation. So if a market has been consolidating on this bridge, it tells you that this bridge is very strong to break. So as a good trader, sometimes before you even buy any coin whatsoever, you need to do your analysis. You need to look at the market. How is the candles behaving with these indicators? Now, I told you guys, for some of us who have attended some of my private sessions like this, I told you about the bridge. It's very important. The bridge, how strong the bridge is will determine, how hard it will take for the market to break it. So here is a market that is bouncing, that is actually, bouncing on this bridge and not breaking it. The more it struggles to break this bridge, the more strong the bridge is, the more likely the market is going to take an upward trend. So if you are a good trader and the market has been consolidating on this 200 EMA, and you see that all the other trend lines have actually mixed together, forming a 4-layer bridge. Man, a 1-layer bridge, not a 2-layer bridge, not a 3-layer bridge, but a 4-layer bridge. That is a strong support. So whenever you see all the trend lines coming together to form, as in whenever you see them choked together, it tells you that the bridge is super strong. So what do? You take advantage of every uptrend because it's going to shoot. And that's exactly what happened here. Because in this kind of a scenario, common sense will even tell you that there needs to be a breakout so that you can have your 5 EMA, which is your inner trend line, and you have your 13 EMA, which is your primary trend line, and then you have your 50 EMA, which is your secondary trend line, before you see the 200 EMA, which becomes the future trend line. So the market has to what? Break out to a certain point before it starts breaking the bridge. Now, if you understand this and you bought here, you would have made a lot of profit by the time the market gets to the peak, especially by the time the market refuses to break this 5 and 13 EMA. You see, there was another spike up. I told you guys, I talked about this not up to 30 minutes ago. All right. So when you get to an extent where the market begins to bounce on the 5 and 13 and is not breaking it, and you can see that the 50 EMA and the 5 and 13 are still very much close, it tells you that the market still need to do what? Spread out. And that is why there has to be a spike. And look at where the breakage happened. Look at where the bridge was broken. So now, if you understand the candles well, as soon as the 5 EMA is broken, as soon as this candle closes here, even if you don't get out of here and the next guy comes and breaks the second bridge, you don't need anybody to tell you to get out because the market is going to drop. But how far it's going to drop, you don't know. So if you apply some of these techniques, you're likely going to make more profit than someone who is just gambling in the market. You get it? So those are some of the tricks. There are still a whole lot of tricks, but we have to, because of our time, we cannot be able to finish everything today. All right. Now, in the next 15 minutes, I'm going to give us an update of what is going on in the crypto space, especially for some of us who are just coming into the space. It doesn't matter what anybody says or what anybody thinks. It is what it is. And what you must understand, what is going on now in the crypto space. Let me go to the Bitcoin charts. I'm going to round up with this. Next time we're going to do more. We're going to look at, some other techniques, but, let's look at what has been going on in the crypto market for some days. There's been a lot of panic everywhere, but the truth is that what is going on in the crypto space is a war. It's a war between fiat and the crypto. That is why I took my time in the beginning of this session to give us a brief history of how it all started, from the Bretton Woods Accord to the Nixon shock to the financial crisis in 2008 and to the creation of Bitcoin and to where we are today. The fight is still on. Until 2008, nobody has been able to challenge the status quo, especially in the financial sector. So it has always been, the elites. Okay. All right. So those who control the world's financial system begins from a certain, from the top. It's just like the design of a pyramid. And that's why you have some of us who are here. I don't know. That's why you have the Freemasons, the Illuminatis, and the rest of them. They control the fiat system of the world. They created it. They control it. Okay? People like these guys, Rothschild. These guys. Now, these are the guys. These are the richest people in the world. The Rothschild family, they own over 90% of the wealth of the world. It is what it is. They were 17th century bankers, right? So they own almost all the central banks of the world, the Rothschild, right? So from them, you have the Rockefellers and the rest of them. So these guys own almost 90% of the wealth in the world. They are worth trillions and trillions of dollars. In fact, Forbes does not even know how much they are worth. So that is it. They control everything. You don't hear them. They don't come out. They don't talk too much, but they actually control the world's financial system. Whether you like it or not, it is what it is. They control the world's financial system. They dictate what happens in many countries of the world, financially, politically. They create even wars. They are the ones that create wars. They create wars. They sell the weapons. They do everything. That is why it's very difficult to fight certain countries. You can't wake up and say you want to fight America. You won't win because your central banks is owned and controlled by them. And they can decide how much you can be able to, use in purchase of weapons. They know they can trace your funds to where you're sending it to. So they have such power. That's the truth. So nobody has been able to challenge them until the creation of Bitcoin in 2008. So the creation of Bitcoin was just like, when you create, you see, it is strange to the world to hear about a financial system that is not controlled by people. All right? Because all this while, these guys, they own all the central banks. They print notes from nowhere. Okay. The money revolves around them, So that's how it is until Bitcoin was created. So because of how people of the world right now, let me tell you about the war that is going on now, the war between crypto and fiat. Now, over the last 10 years, most people have seen how the crypto space has evolved through many trials. They've deployed everything they can deploy, and they are still deploying it. Media, everything they can deploy. They are even using their money to manipulate the crypto space. They are doing it for a reason, and the only thing they are doing is to create the impression that, it is better for the world to remain in the fiat system, where a few persons can wake up and print as many notes as they want, and then change the exchange rates as they like, and and nobody questions them. So they just want that status quo to continue. But when Satoshi created Bitcoin in 2008, it is the first decentralized system. Even Satoshi himself, I showed you guys the first transaction that took place, that Satoshi carried out. If not that he was, the first miner and was able to accumulate a lot of Bitcoins through the process of mining, he would not even have one Bitcoin as of today. Satoshi himself, the creator, the guy who wrote the code. That is how powerful the blockchain network is. It is not something that you can wake up and call your central bank, have an emergency meeting, and start printing papers. No, right? So these guys are deploying so many things. So what you see happening recently is that over the years, the more they deploy these things, the more Bitcoin become even more popular, the more the crypto space is even evolving. Recently, we've seen different technologies springing up in the crypto space. We've seen the rise of decentralized exchanges like Uniswap, and a whole lot of them coming up. And now we are beginning to see the DFI also came, decentralized finance, a world where everything you can do in the bank, you can actually do it on what? On blockchain. That is the use of decentralized finance. There are over 1,000 plus projects on decentralized finance alone, be it insurance, be it loan taking, lending, anything you can do physically on the banking system, you can do it via DFI. So it's like, with all these technologies coming up, they are not comfortable because the control they have over the fiat system is gradually fading. It's gradually fading, and a time is going to come when people would decide if they want to pay tax or not, because their monies will no longer be in the banks. Their monies will be, in the crypto space, which only them is entitled to it because they have their password to themselves. All right. So that is one of the things. So the powers that be are actually fighting against, a system which they see as a threat to their status quo, because they want to control the world forever. That is it. Okay. I'm not going to go deep into the Rothschild. You can read more about them. There are some things I really don't need to say here, but it is what it is. So, but that is what you must understand. So now, recently we saw the introduction of NFTs. NFTs. very, very powerful. So when you see all this now, with all these inventions springing up, there are so many fears that the government is going to lose that, control, that financial control, because like the way they can actually, you see, the governments of the world can actually, they can actually remote, they know how to manipulate the system. All right. And that is why we have something like, the what do you call it? Sorry, someone remind me. Your annual, sometimes they do something like your, oh, I've forgotten. I'm not an economist, but there's this general economic analysis that is done in every country every year. Your GDP, all right? Now they tell you that the GDP of a country is doing fine and is doing well on paper. Meanwhile, infrastructure wise, the cost of living wise, and all those factors are actually zero. So these guys are scared that the crypto space is decentralizing wealth, because in the crypto space, you earn only what you own only what you deserve. No, you cannot wake up and just create your, and go print Bitcoin somewhere. No way. Because the code has been written, and the process in generating any coin, it has to go through that process of proof of work. And that proof of work is a process that, if you're not a miner, or even if your mining power is not as, if your mining power is not as competitive as it's supposed to be, you might not be able to find a block. You might not be able to earn even so much while mining. So the power of decentralization is what is creating all this for us. That's why you see them calling about now. They are looking at regulations. Okay, but when you talk about regulations, cryptocurrency regulations, like some of the things that affected BTC lately, there was this, first of all, apart from Elon Musk coming out to say, okay, because Bitcoin is still based on proof of work, then it's not good for climate change because it requires a whole lot of energy to mine Bitcoin and all that. Okay, that created its own panic, but we also forget that apart from Bitcoin being generated through the mining process, which actually requires a lot of energy, fine. There are so many other, you know, there are so many other devices or equipment, so to speak, that consume even more energy than the miners, than Bitcoin miners. And that's the truth. We have a whole lot of we have many industrial equipments that actually consume so much, far more than what Bitcoin miners actually consume. So why are they targeting Bitcoin? So these are processes, these are a way to kind of slow things down, bring it down, because they know that the blockchain network does not have any centralized server. For instance, with what is going on, let's assume that Bitcoin is kind of centralized, and maybe Bitcoin server is sitting somewhere in an office in California. Don't you think they would have shut down that server? I mean, for the past 10, 12 years now, they would have threatened to shut it down. If not, they would have shut it down. But because they know that because it is decentralized, you cannot shut down. There is, if you decide to, how do I put it? You cannot shut the entire Bitcoin network down, because it's a connection of what, millions and millions of nodes across the globe. So if you say, okay, everybody in the USA will not trade in Bitcoin, people will still use VPN and connect to the Bitcoin network without your notice, so long as the internet exists. So to bring down Bitcoin or bring down the crypto space is like bringing down the whole internet in the world, which is practically not possible. Because, and even when you, so these are the reasons why they are looking for every way to kind of slow things down. So Elon Musk created that panic with Doge and everything. All those things are politically motivated, just to create that fear. So these guys who manipulate the forex market, which they control, they pump their billions into the crypto space as well, push one or two coins up, create panics, drop the price, So they do all these manipulations to create the impression that, oh, this thing is not reliable, the price is not stable. They do all those things. They have all the money. They push those coins that way. All right. So how can the people prevail just as it has done? So long as the power of the central, so long as the people continue to love their, enjoy anonymity, so long as more people prefer to hide their identity, why trading, especially financial trades, Bitcoin or crypto, and in the entire crypto space is going to succeed. Because whether you like it or not, most people are beginning to like it, the crypto way than the fiat way. That is just the truth. So most people are beginning to see the potential in the crypto space than the fiat space. So people creating these panics and these manipulations are actually the powers that be. They are doing it through regulations. And that is why if you're here, you need to pay very close attention to decentralization. Because this what happened to Bitcoin now is Bitcoin is going to recover. Bitcoin is going to recover, all right, like it has always done. It's going to come back to 50 or 60K, is going to get there to even break it, all right? But what you need to understand is this. If you are one of those who are bought low and you think, oh, it's not going to go back up, you're joking. So long as this system is decentralized, the demand will always push the price back up. Okay, so just hold and hold tight. You're going to get your money back. All right. So there is nothing to worry when it comes to Bitcoin. Remember in 2017, from 21K dropped to almost like 3,500 or thereabout. And where is it today? Okay. So what they are doing, creating panics here and there, is because of what I just told you. They want to control the system. They feel that they are losing control of the financial system. So, but no matter what they do, more people are beginning to be enlightened every day. People are beginning to understand that, man, we have actually been, our life have actually been controlled by some certain people. So in order for the world to break out of these people, in order for the world to break out from this financial chain created by these guys, the crypto space is the only solution. So if you're hearing this for the first time, what you should learn is that you need to do your homework. You need to go deeper and understand how decentralization works. We teach that in our training. If you have the time, you can join us in our training. You study more about decentralization, see why it is. Some people who understand how powerful the blockchain network is, some of these things actually will not move you if you understand what is really going on. That it is a war between the fiat and the crypto space. So, and as time goes on, as the market recovers and, the crypto space begin to evolve as it is doing, there's going to be more regulations, physical exchanges like Binance and some other centralized exchanges are going to be bullied by these guys. They're going to be bullied because Binance, for instance, is actually, it has a server in, I don't know where they are. I think they were in the US before, but they moved to another country because of some of these regulations. So they might bully some of these public exchanges, but it doesn't mean that the entire crypto space is going to stop. No, it's going to create the usual panic. So that is why you must pay attention to DFI, decentralized finance. So when I talk about DFI, I'm talking about decentralized exchanges. Sorry. When I talk about DEX, which is decentralized exchanges, these are exchanges that are not seated on any, countries. They're not seated anywhere but on the cloud. Okay, these are decentralized exchange. We have the Pancake Swap, we have the Uniswap. Okay, currently Kit is doing a whole lot. That's Deskit. Deskit is actually creating a platform that looks almost like a regular centralized trading platform. As you can see what they've done so far. You can trade on Deskit, which is this is the beta version, but I know the mainnet's out. So this is what it looks like. This is a decentralized platform where you can connect your MetaMask, all right, and trade just like the way we are trading on Binance. You can trade the same way here. You can place limit orders here with no fees, okay? The same way with trading futures, you can trade the same thing here. And this is a decentralized platform. So decentralized platforms like this are not going to be affected with any regulation. You don't need KYC here on any on decentralized exchanges. You don't need KYC. All you need is just connect your MetaMask wallet and you're good to go. All right. So once you connect your MetaMask wallet, every token listed on this decentralized exchange, you can trade all of them. You can see this is Chainlink. You can trade any of them. Okay. You can buy and sell. The same thing you can do on Binance. So that is how the space is going to evolve. So for some of you who don't understand how the crypto space work, you need to pay more attention into it. Forget about the noise, forget about the, what you hear in the media, the mainstream media. The mainstream media is actually being sponsored and paid by these guys. So, but it doesn't matter what they do, the world will continue to, the people will continue to overcome. All right. More people are beginning to wake up to the reality that we just have to break out from these guys, because everything these guys have done was to control the fiat system forever. So Bitcoin is the only thing that challenged them since 2018, and it's been a war between them and Bitcoin, right? And Bitcoin will always win because decentralization will always win. There will never be a time when the whole internet in the world will be down. It's not possible. So the blockchain technology will continue to evolve. All right. So what do we think is going to happen in the next few days on Bitcoin? Actually, today I didn't really have time to talk about, some of the things we need to take cognizance of before, like if you want to place a trade on futures, one or two things you need to take advantage of. But let's just look at, let's crown it all with BTC USDT. All right. Now let's look at what the market has done for some days now. There was a drop all the way from 60K down to 30K. Okay. Almost about 28,826. Okay. So now somebody will be asking, some of you will be asking, so what is going to happen next? In Bitcoin, is it going to go up? My friend called me from Washington yesterday. I was like, so Jex, what is going to happen? Is it going to go up? Is it going to go? So everybody wants to actually understand what is going to happen. But based on technical analysis, okay, the market is still very much on the bearish zone. If you follow what I've just been saying about, your indicators, your trend lines, and all those things, you can see we have the 50 EMA, we have the 13 and the 5 EMA, and we have the 200 EMA. You can see right now, as the market dropped, as soon as it breaks this bridge, remember what I told you about the bridge? You can see when the bridge, you can see how the bridge is. As soon as it broke this bridge, did you see it drop down to the 200 EMA? How many of us can see this? Now it breaks the 200 EMA, and now to this point, I need to close this so it doesn't get you confused. So now all the bridge has been broken. So the market is actually in the water. If you can see what I'm explaining, can you type on the chat box? We're going to round up here. We have less than 10 minutes to round up. Okay. How many of us can see what I'm trying to explain here? If you can see the bridge, type on the chat box if you can see the bridge, rounding up. So this is what is going on. The market has actually broken all the bridge and is actually in the water. Bitcoin is actually in the ocean right now. Okay. Okay. So Bitcoin is actually in the ocean. Okay. So now when you put your leg in the ocean, or when the market fell into this ocean, all right, it got to this point. Let's pick a line. Can you type on the chat box if you're following what I'm doing? Just type on the chat box. Let me see. Let me pick a line. And for some of us who don't know how to do that, the Binance platform or any other exchange platform, when you go to the advanced trading section, it shows you how you can actually, analyze your market properly. Okay. So let's quickly do something. Now, how far is the market going to go? Let's analyze this market before we round up. Now let's pick a straight line. If you want to pick a straight line, just if you're new to this, when you open your Binance chart fully, you always see an arrow sign here. This arrow sign will show you the tools that you have to work with. Remember, practical technical analysis involve what? Analyzing the market properly. That is the right way, okay? Like I told you, fundamentals can always come, but if you're practically good, if you're technically good, your chance of succeeding in the market is very, very, wide. So I'm going to drop this horizontal line here. Now, look closely. This was where the market, as soon as the market broke this bridge, it came to this other bridge and broke it, which is the 200 EMA. Now, the market fell into the water and it got to this level. We can't tell if this level is if this is the depth of the water, right? But, when you jump into the pool, some of us who have been swimming in the pool, sometimes if you get to the deeper side, maybe that is kind of above you, all right? So maybe 10 feet, 12 feet. If you step into the water without swimming, you're going to strike your leg. Once you strike your leg on the floor, you're going to push back up. True or false? True or false? If that is true, type on the chat box. So that's exactly what happened here. So here is Bitcoin breaking into the water. As soon as it hits this particular spot, it pushed up immediately. That tells us that there is a bottom here. Okay, because of that, this becomes a support line. So after pushing back up, we've seen that this market have tried to break this bridge. I'm going to draw in another line again here. I'm going to draw another horizontal line again. Just exactly where this is. Now we have two horizontal lines. Now, the market strike on this bottom and it has been struggling to break the initial bridge. It has been struggling to come out of the water. This is the water. I can indicate it by text. So you can actually play around when you're analyzing your market. You can actually play around, okay? You can type here water, or you just use inside the water, okay? So when you do this, you are likely going to understand the market better, okay? Border, no. Oh. Okay, let me change the color to something yellow. Okay, so guys, where is it? Sorry. Sorry. Inside water. Oh, let's use this. So this is inside the water. Sorry, I'm trying to get this. Okay, I hope we understand what I'm trying to do. I don't know why the text keep 1 minute. Okay. So this is inside the water, right? Okay. So here is inside the water. And let me put it here so that you can see it clearly. So everything here and here is the water, because as soon as the Bitcoin broke, as soon as it broke the 200 EMA, which is the future trend line, it stepped into the water, strike on this bottom, and now the market is still in the water. How far is it going to go? When is it going to break out? Because this is inside the water. This is what? Outside the water. All right. Let me also indicate that here. You can do the same. If you're on Binance, do the same. That's the essence of being practical. You can actually do the same outside the water. So trading is fun if you understand how to analyze your market well, okay? And you can actually enjoy trading. So this is outside the water, this is inside the water. So The yardstick is, if this market at any point in time breaks this line, then it's outside the water. It's likely going to continue that uptrend back to 60K. But how long is it going to get there? How far is it going to go next? How far is it going to go next? That's what we want to look at in the next few minutes. I need to save this. I need to lock it so it doesn't go away. Okay, so now the 1-day candle is telling us that since today, this particular 1-day candle opened here where this one closed yesterday, pushed down as if it was trying to, go bearish, and now it's returning bullish. In the next 2 hours, this candle is going to complete. Another candle is going to start forming. Now, when the next 1-day candle begins to form, within now and the next 2 hours, the next 1-day candle will start forming. Now, when that happens, can you see that there's a resistance here? This red line. How many of us can see this red line? If you can see this red line, type on the chat box. So the next candle that's going to start coming is going to face this first resistance line. So whatever happens between the next 1-day candle and this resistance line will determine if this market is going to come back to the surface by testing this level again, or if it's just going to strike the resistance line and then go back down to the water. So what should you look out for as a good trader? You look out for what will happen on the 5 EMA when the next 1-day candle forms. When the next 1-day candle forms, if it closes bearish in the next 2 hours, if it closes bullish, if this candle closes like this in the next 2 hours, trust me, the next candle that's going to form is going to be a bullish candle. But that bullish candle, how far it's going to go will determine how fast it's able to break this line. So there's already resistance number 1, all right, trying to prevent the market from coming out of the water. So if it breaks this first resistance, there's likelihood that this market might likely kiss the surface of the water, which is on top, which is outside. So when you start seeing the market kissing this level continuously, it's likely going to come out of the water and then continue the uptrend. So what do you do at this stage? Because this candle is closing bullish, this 1-day candle is closing bullish, do not expect the next candle to become bearish. It will be very, very rare, except if it strikes this first resistance line and it doesn't break it, then it might return at the end of the day and continue the bearish sign. Maybe by tomorrow, the next candle that's going to come tomorrow might continue that downward trend. And one secret you must know is this. Because the spike that happened, you can see this is a hammer, right? This is a bearish hammer. If this was to be a bullish hammer, take note, if this was to be a bullish hammer, by now, the price of Bitcoin would have been somewhere here, around 49 to 50K. Because bullish hammer indicates a new turn of the market on the upside. But this is a bearish hammer. Because it's bearish, mark what I'm going to tell you. Because it's bearish, there's likelihood that this market is still going to play around this 5 EMA, play around it for some days, and then return back to 28 or 30, whatever exactly where this bottom is, strike it back, and then take off in a bullish way. So this market so Bitcoin now, technically, it has taken off by striking it on this bottom. It took off in a bearish way, which does not indicate a U-turn on the upside. Take note. So because this doesn't indicate a U-turn on the upside, it's not going to go up for long. It's still going to touch back down and then take off in a bullish way before the main bull trend will continue. So this is a very, very time to endure. So if you understand what I'm telling you now and you're trading futures, you're going to be trading more on the downside. Keep your eyes on the bear market because it's still going to go down. We are not coming up yet. The market is not coming up yet based on analysis. All right? It's not. The market is still in the water. So you trade it to that direction until you get that bullish signal, the bullish hammer that will take off the bullish movement. Okay? So that is how far I'm going to go today. There's still a whole lot, but we can just finish everything in one day. So, but I believe, you know, I'm always very busy. I hardly have this private session, except for some of our students who, you know, but I'm going to try and make out time for private session like this. Perhaps in the my next session, we're going to look into more factors that can help you succeed in your trading futures or your trading spots. But whichever one you decide to trade, just make sure you follow the rules of the game and you'll be very, very safe. At this point, if you have a question or you have anything, you have like, 5 minutes or less, you can just, let me check you can type on the chat box if you have a question. Maybe you want to, and for those who might be interested in our training program, just fill this simple form. I'm going to paste it on the chat box. Just fill this form. All we want to know is your level of trading experience. If you've been trading before, if it's your first time, we just want to have your email and see for those who want to continue to understand, because everything about this market, you don't just know it in one day. Okay, so the more you relate with the markets, the more you understand how it works and what's actually going on. Okay, so the link to the training is there. You can just click there, sign up on the training. Then we can take you from the beginning, because some of us are new into this. To some people, everything we've been saying here is, it looks more like, it looks very strange to some people, but that is the way it is. You have to begin from somewhere. So that is it. And also, if you, 1 minute. Okay. Thanks, Lisa. Glad to know you. I mean, I thought you slept off. I thought you slept off, but it's good you're here. I'm sure you've learned one or two things. Now, if you pay attention to this candle, you can see something is happening on this candle, right? Okay. So we're not out of the woods yet. The market is still very much in the water. So don't let anybody tell you, go and buy, go and buy. If you buy, fine. It might go up, but don't expect that, dramatic bullish trend to begin now. No way, because you can see the market is already inside the water. The 200 EMA has been broken. Until the market comes out of this water, outside the water, just mark this line where the 200 EMA is. That is when you can begin to see a bullish trend. But for now, the market is still very much in the water. So if you're the type who bought at 60K, just relax. After some time, maybe some days, maybe 1 week time or less. Sometimes there might be some fundamentals that can just come, boom, and everything will just happen in 2 days. And the market is back, right? But for now, just remember that the market is still inside the water. Okay. I wanted to say something, but I forgot what I want to say. So, that's, I've dropped the link for those who intend to join our training program. There's a whole lot more, but you see, in this session, we can't really finish everything. Trading is a whole lot. You see, so why I took you guys from, the beginning of trading is that if you understand the history of trading, if you understand what is going on, you'll be better positioned. Like people who understood what Satoshi was saying in 2008, everybody who understood what Satoshi was saying, who saw that the world's financial system, the fiat system, has failed and will continue to fail, those are the guys who bought Bitcoin at less than $1. Most of them are multimillionaires today. It doesn't matter how much Bitcoin falls. So the same thing is going to happen between now and 2030. So all this media propaganda about blockchain, about this, is all actually people behind it. It is the power of control. But you see, technology does not wait for anyone. That was why during the internet revolution in the early 90s, the world could not afford to continue to do business offline. As soon as the hypertext transfer protocol, the web browser, as soon as supercomputers became possible, desktop computers became possible, every business had to move to the internet. It doesn't matter whether you like it or not. Technology will make you move. The same thing is going to happen. So blockchain is going to change everything. It's going to change the way we do business. whether anybody likes it or not. So you must position yourself well, and be in this space, learn the technology, okay, and see how you can actually make the best out of it. All right. So I want to thank you for your time. I think there is no question, it's clear. For those who want to, you know, someone is saying, do I have to pay to get these indicators, because I never see these indicators on Binance? Oh no, you really don't have to pay, but you can get it. If you look at, you can see these are indicators. Just type your EMA, okay? But you must know how to use the indicators well, okay? There are techniques towards using it well, but you can apply the same exponential moving average, but you must know how to interpret the market well, okay? So that's how it works. So with futures trading, you don't need to start with 10, you don't need to start with so much, right? You can start with even this $300. You can turn it, you can become $1,000 tomorrow morning if I have time to trade. Yes, just take advantage of the ups and downs, how the candles are forming. Get your $50, get your $20, just keep picking them. You don't need to spend the whole day in the market. Just pick, you know, pick your $100, $200 a day, go do something else. All right. So you can do it, and it's very, very possible. Okay. So thank you for your time. You can, if you want us to contact you personally, I know you can drop your contact on the chat box if you think it's okay, or better still, just click on the link, and we hope to see you in the next session. I bye to everyone, those who joined from Asia, those who joined from wherever you joined from. It's been a nice time, and I want to thank you for your time. See you next time. Thank you.